Let's start with something small this week, something that you might have noticed already, but don't quite know why. If you bought a laptop in Taiwan last month, maybe a back to school machine for your kid, and paid more than you might have in May, now let's expand the horizon. Let's expand to May 2024. Then you would have definitely paid a lot more than 2 years ago. Not because of tariffs, not because of a typhoon, but because of memory chips. The components that let a computer hold information while it's working. And memory chips have gotten expensive because the world's AI companies are buying them faster than anyone can make them. Now, what's new, you ask? Well, that's the AI boom, showing up on a household receipt. And that chain doesn't stop there, because now the essential goods are becoming more expensive too, because the overall economy is inflated. That's what inflation is, when the cost of everyday things start to rise because the economy is growing. And that boom runs on borrowed money too, raised in New York at interest rates set in Washington, which is exactly what we're looking at this week. Hi, you're listening to Beyond the Reefs, a show produced by Radio Taiwan International. Here we talk about socio-economic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation. Now, before we get to the meat of the show this week, here's what's been happening in Taiwan. Last week we talked about the Silicon Rush boomtown, that's Taiwan, and about how Taiwan's wealth, pensions, and tax base have all climbed aboard a single AI-driven vehicle. This week, the numbers from that trade came in, and they're staggering. June exports hit just under $75 billion, up 40% from a year earlier, the third highest month on record, and the 32nd consecutive month of growth, the longest streak among major economies. The first half of this year set a record too, about $417 billion in exports, nearly half, again, what Taiwan shipped in the same period last year. And in the very same week, inflation hit a 17-month high, and the Taiwan dollar fell past 32 to the US dollar for the first time since March. Record money coming in, rising prices at home, a weakening currency in between. Those three facts are not a coincidence. They're one story, and they don't paint a good one for Taiwanese people. Start with the good receipts, because it's genuinely looking pretty good. June wasn't a fluke month. The second quarter this year was the first in Taiwan's history to top $200 billion in export. Shipments to every one of Taiwan's 5 major markets set first half records. Exports to the U.S. alone grew 69%, and the trade surplus with the U.S. crossed $104 billion in 6 months. That's the first time it's ever crossed $100 billion, and the finance ministry itself says the full year could pass $200 billion. Taiwan's export growth in the first half ranked second fastest in the world, behind only South Korea, and not by much. And the finance ministry sees no slowdown coming. Its own forecast for July is another 76 to 79 billion US dollars, which would rank as either the second or third highest month ever recorded. Now, on the other hand, also in June, consumer prices rose 2.6% from a year earlier. That's the fastest inflation in 17 months, and the second month in a row above the central bank's 2% alert line. 2% is the threshold where the central bank, really around the world, would officially start to worry, and Taiwan has now spent 2 consecutive months above it. Here's the thing. I would argue that these two incidents were printed by the same machine. The export boom and the price increases aren't happening side by side. One is flowing into the other. And to see how, you have to open up the inflation number and look at what's actually inside it. The CPI, that's Consumer Price Index, is basically a giant national grocery receipt. Statisticians track the prices of everything that a household would buy, weigh each item by how much of the family budget it takes up, and add it up. Most of June's jump come from familiar places, like fuel prices, which soared 19.5%, because of Middle East tension. For context, that single category rose faster in 1 year than overall prices have risen in the past 5 combined. Air tickets, that's airline fuel, jumped 13.5%. Vegetables climbed 10% after heavy rains wrecked harvest. Electricity rose above 4.5%. Natural gas 7.5%. Dining about 3%. But buried in the data is the line that made the stop. Memory chip prices, driven by what global AI buying frenzy has made computers and peripheral devices so much more expensive that the education and entertainment equipment category jumped 7.4% in a single month. And that's the biggest 1-month increase that category has recorded in more than 44 years. That's a record older than the personal computer itself. You think about what that means. The AI boom is now in your grocery receipt, not as a metaphor, as a line item. Of course, this is not only Taiwan. In the US, Apple raised prices on Macs and iPads in June and named memory costs as a reason, and American consumers have filed suit against the 3 big memory makers who control roughly 90% of the market. We've talked about Taiwan's K-shaped economy before, and I don't want to relitigate the whole thing, but just quickly, the mechanics is that the letter K, has 2 strokes moving in opposite directions. The idea is that people holding assets and export income ride the upper stroke, while the wage-earning households sit on the lower stroke, either flat or sliding down. What June's data shows is the lower stroke isn't just missing the boom gains, it's being handed the cost for the boom because of inflation. As the price of everything rise because the economy is growing, the people who are on the downstroke, they're making comparatively less, still have to end up paying more. Now, the officials looking at the same receipts are much calmer than I've made this sound, and their case deserves a fair hearing, so let's talk about it. First, they point out that tech gadgets carry a small weight in the CPI. Families don't buy laptops the way they buy lunchboxes, right? So the impact on the total number is limited, they say. Second, crude oil has eased back towards $70 a barrel, so the fuel spike should fade. Third, central bank governor has said flatly this week that full-year inflation will come in under 2%. The bank's forecast is 1.93%, and that with oil falling, Taiwan faces no real risk of imported inflation. That's reassuring, right? I mean, the June number is a spike, not a trend, they say. Bad weather plus a bad month for oil, both temporary, and that reading might be correct. But there are 2 cracks in this theory. The first is that under 2% full-year figure exists partly because the government spent the first half actively suppressing prices through stabilization measures. The calm is partly manufactured. And the second reason is even quieter. Core CPI, the version that strips out volatile fruits, vegetables, and energy precisely so weather and oil can't distort the numbers, rose 2.45% in June. The measurement designed to ignore the temporary stuff is still above the alert line. Whatever is pushing prices up, not all of it washes out the weather, and Typhoon Bavi is already expected to keep July's number above 2%. So where is the pressure actually coming from? Well, follow the pipes, and both of them run to the U.S. Federal Reserve, America's central bank, through 2 separate channels. Channel 1 is the currency. In mid-June, the Fed held its policy meeting and markets came away reading the new Fed chairperson, Kevin Warsh, a more hawkish chair than expected. A hawk in central bank slang means someone who's inclined to raise interest rates to fight inflation and so make everything, especially borrowed money, more expensive. The Fed also released its dot plot, literally a chart where each policymaker anonymously marks a dot where they think rates should go. And the dots pointed to at least 1 rate hike this year. Higher U.S. rates make the U.S. dollars more attractive to hold, so the dollar strengthened against nearly everything, including the Taiwan dollar, which slid past 32 per U.S. dollar. Taiwan Central Bank pushed back, selling US dollars, buying Taiwan dollars to slow the fall. And partly as a result, Taiwan's foreign exchange reserve dropped by nearly 8 billion US dollars in June, falling below the 600 billion mark. Now, why does a weak currency matter for your personal receipt? Well, because Taiwan imports its energy and a lot of its food priced in US dollars. Just go to the groceries and check for the place of origin. A lot of it come from California or parts of US. And here's the cleanest proof I've seen. In June, Taiwan's import prices rose 23% measured in Taiwan dollars, but only about 15% measured in US dollars. That 8-point gap is exchange rate, pure currency weakness, landing directly on fuel, gas, and food. When Washington's rate expectations move, Taiwan's grocery prices move with it. Now, Channel 2 is the boom, the AI boom itself. The AI build-out generating Taiwan's record export order is running on debt. AI-related companies have issued roughly 335 billion US dollars in bonds this year, with Amazon alone carrying about 80 billion in borrowing. Every notch that Kevin Walsh adds to interest rate raises the cost of financing the very data centers that order Taiwan's chips. Markets have noticed roughly 70% of the S&P 500's technology stocks, America's benchmark index, have fallen more than 20% from their highs, and South Korea's Kospi index dropped over 20% in 3 weeks. Foreign investors have pulled about 100 billion US dollars from Korean stocks this year and roughly 30 billion from Taiwan's. The relationship is symbiotic, right? Taiwan earns its record surplus in dollars, holds its savings in dollars, and defends its own currency against the dollar. And Japan shows where the far end of that road leads. Tokyo spent 17 billion US dollars propping up the yen in April and brought only 6 weeks of relief. The yen now sits at a 40-year low with forecasts of going worse. Which brings us to the pattern I actually want to leave with you this week. Not that the Fed matters, everyone knows the Fed matters, but that it matters differently to the two different strokes of the K-shaped economy in Taiwan. The upper stroke exposure is reversible. If Kevin Walsh hikes and the AI trade stumbles, stock portfolios get marked down. Export orders slow, the currency wobbles. That's painful but recoverable. One pivot back to rate cuts and asset prices can retrace the whole move. Paper losses can unhappen. But the lower strokes exposure is not built that way because consumer prices are sticky. Prices ride up like an escalator and come down like a staircase, if it ever comes down. When inflation improves, it means prices rise slowly. It almost never means the price of your lunch, your power bill, or your kid's laptop go back to what it was. Inflation almost never come back down. Economists have documented this asymmetry for a century. Prices ratchet. Put the two together and you get an uncomfortable arithmetic. A hawkish reason in Washington can erase the upper strokes gain while locking the lower strokes costs. If you pay for groceries in cash, there's no paper loss. The money is just gone. You have to pay more now. But if you lose $1 or $2 or 100 or 2 in the stock market, that might come back if you don't sell the stock. So the households are the one who own the least of the boom to begin with, and now they have to pay for it too. This isn't a Taiwan quirk either. The same transmission is running through Seoul, Tokyo, and Manila right now, which means the question of who ends up holding the permanent bill is being asked across Taiwan and the rest of the region simultaneously. The export machine had its best quarter in history. The question June quietly asked us is, best for whom and build to whom? That's 2 honest readings. Maybe Taiwan's buffer holds. Households sit on 280 billion US dollars in excess saving, and incomes are genuinely rising on average, or maybe those buffers belong mostly to the upper stroke while the lower stroke pays retail prices. And if it ever cracked for real, well, this show will be there to tell you about it. Thank you for listening to the show. I'm Joey Cho. Tune in next week to find out about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation.